The idea is to just try to get as much understood and out in the open between the parties as possible, and having an attorney involved is really helpful. That's separate from the title company, right?
Welcome to the Idaho Real Estate Investor Show, where we bring strategies and knowledge that will help you succeed in Idaho's ever-changing real estate market. I'm Jonna Weber. I'm an Idaho investor, realtor, and entrepreneur. I've been successfully investing for over 2 decades and helping countless others do the same. We'll bring you real stories from successful investors, expert advice, and insights to help you build generational wealth through the power of real estate. Whether you're just getting started or well on your way, let's jump in. Hey friends, today I'm going to share my interview with Tayler Tibbitts, and it is so chock full of information. You're going to want you to have your notebook handy or listen to it again. He'll probably be back for a future episode because there's so much that we could cover when it relates to Tayler's area of expertise. He's a real estate attorney, and he is also an expert when it comes to all things title. We're going to break down some of the nuances and things to look out for when it comes to seller financing, creative financing, sub-2 wholesaling, all the key terms out there that all of the real estate gurus are throwing around, and how to make sure that you're protected and doing things the right way. Without further ado, here's my interview with Tayler. I hope you love it. I'd like to welcome you to the show, Tayler.
Thank you so much for having me on the show. It's a pleasure to be here.
Yes, I'm so glad that you were able to get in and we were going to make schedules align. I know you're really busy. What we want to do today is really unpack so many questions, as we have a Facebook group. We have about 5,000 people in it. And one of the most common questions that happens over and over again is talking about how to structure deals, what's legal, what's not. And I think you have such a amazing perspective with both being a legal background and then, of course, being active in a title company today. So you're seeing deals that are actually happening in our valley, which is really important and current. And I hope we can delve into some of those things and really educate our viewers and our listeners today on the best way to go about, if you're going to go about with creative deals, different kinds of financing, all of that sort of thing, and then really understand do's and don'ts. Does that sound good?
It does. It sounds good. It is an interesting place to be from a transactional standpoint at the title company, because our role is unique, but we do see a very high volume of transactions. So we can kind of get a pulse on what's going on in the Valley currently. I can say that there's a lot of creative financing transactions that are at least being put under contract, and whether they close or not, there's a lot of moving parts and challenges there, but we do see quite a few, and I'm happy to share kind of some ideas and thoughts about how to structure those appropriately.
Awesome. People are probably wondering, okay, we don't hear many attorneys that are in title. How did you wind up in title?
That's a good question. Nobody, I guess I shouldn't say nobody, probably a few people do, but very few people go to school thinking, I'm going to work for a title insurance company. Most people don't know what title insurance is, and I was actually in the same boat. In law school, I went to University of Virginia, great law school, no education about title insurance either, right? It wasn't like I came out of law school going, okay, now I know. Now that's what I want to do. I worked for a law firm here in Boise, a great firm, but found that I was really interested in business development and sales, and associated a bigger firm. That's not always the goal for a firm, right? They're typically wanting the associates to bill hours, and I just found myself always trying to find more opportunities to market and originate business, and I loved building a customer relationship and was just more entrepreneurial. So I was looking for something that might fit that better, and fell into a conversation about an opportunity at a title insurance company here locally, and they wanted an attorney to start their commercial department. And I said, look, I don't really know that much about title insurance, but I'm super interested in sales, and I think that I could learn. And they gave me a shot. I founded the commercial department there, and we built it from the ground up. And that was over 10 years ago, or around 10 years ago. And it's been history since then.
That's awesome. And it's been on our radar. We've seen Fidelity do amazing things in our market, especially over the last year or two.
Thank you.
And I know that you have a lot to do with that, and I just appreciate everything that you and your team are doing.
Thank you. We're definitely trying to grow in the right way and attract great talent and people that catch the vision of what we're trying to build here in the Valley. Fidelity's a large company nationally, but in Idaho has been small since they acquired an interest 15 to 20 years ago. And so it's been a little bit of a slow burn, but as the markets continue to grow, the company's ability to invest here locally has also grown, and we're happy with the growth that we've seen so far.
That's cool.
Thank
I was
you.
in your offices recently, and it just feels good.
There's
Like,
a
there's a
fun
good
vibe in
energy
there.
and-
Yeah, it's a cool team, and our title and escrow business is really built around being able to produce high quality title insurance research and commitments, and then also an escrow experience that's really positive and a sales team that understands customer needs. I look across the team that we have, and in all those areas, the groups are all really strong. So it's fun to see that people that are happy to be there and rowing in the right direction.
Cool. I love it.
Thank
And
you.
so it feels very Idaho, even with
I
the
love
national
that.
influence, but that's a compliment.
Yeah.
Those of us from Idaho love Idaho.
Yes, we
And by the
do.
way, are you from
I am. I'm
Idaho?
from Salmon, Idaho. And
That's right. I knew that.
yeah, so I'm a small towner. But
I love it. Yeah, I'm Sandpoint High
awesome.
graduate myself. So I long about way how I got there, but that's for another podcast.
Right.
Let's delve into this. The creative deals, the structure. We're in an environment right now where obviously we've been in this higher interest rate. We had to hit the brakes on our low interest rate honeymoon a couple of years
Mm-hmm.
ago. And since then, the biggest buzzword that I hear in real estate investing right now, especially among newer investors, is the idea of creative financing and structuring deals creatively. And I know you see a lot of those walk through your title company as they proceed to closing. And it's not always as simple as it seems or it's portrayed, whether people are watching YouTube videos or infomercials or that sort of thing on just the magic way to buy properties with no money down.
Mm-hmm.
But what kind of creative deal structures are you seeing most commonly used right now in our market?
I like to talk about creative finance from a sliding scale perspective. There's less risk and more traditional, and then it slides on down to more risk and less traditional. And so there's a few different kind of categories that I would fit creative financing transactions into. And then because they can take many different shapes and forms, there's always outliers, and it's not a perfect science. But on the kind of the less risky, more traditional standpoint is just an assumption of an existing loan. You've got to have either a willing lender or an assumption right that's been reserved in the loan documents to allow a new borrower to assume an existing borrower position and have a lender on board with that. We don't see a ton of those just because the lenders they're seeing the interest rate on the existing loan, right, and what they could get on a new loan. And so generally, conventional lenders especially aren't super keen on assumptions, but we see a few of those. Probably one or two a month, there might be an assumption situation, especially on VA loans. So that's something to consider. And then as you work down the line, the next up is what I would describe as a subject to transaction. You hear folks call these sub-twos, but the idea is that property is being acquired with an existing loan of some kind or lien or encumbrance or liens or encumbrances in place that cloud the title there, and the new buyer is taking subject to, but the documentation around the purchase doesn't necessarily factor in a payment process to take care of regularly recurring payments to the lenders if those are in place. It's a little bit more complex than an assumption, of course. Very different from a wraparound financing situation, which I'll talk about in just a second, but is sitting in the middle there, maybe a little bit easier to document because that buyer is coming in and basically just saying, all right, I'll take it. I'll take it how it is. We'll figure this out. And then as you work down the line, you've got the wraparound financing situation, which I think is what we see the most of, just because most borrowers don't just want to go in blind on a subject to transaction. They want to know that the loan's not going to get called. They want to be able to avoid some of those risks. The wraparound structure is really where you've got an existing loan in place between the property owner, who's now the seller, right? And then that seller carries a portion of the financing with the new buyer in what we would call a wrap. That all-inclusive deed of trust that secures that against the property is going to wrap around the existing first position loan. And the biggest cause for concern in a situation, whether it's a sub-2 or a wraparound financing situation, is that the lender is generally going to have a due on sale clause in the loan documents, right? And so there's a lot of creative structures where people try to avoid that. And I think it's important to address the elephant in the room there, which is that some folks would just say, well, wraparound financing or subject to transactions are illegal because of the due on sale clause. And I think that's overstating the situation. There's not a statute in the state of Idaho, at least, that makes it illegal to have a wraparound financing situation or a transfer of property that's subject to a due on sale clause in loan documents. It's an allocation of risk that the parties need to contemplate and make sure that their documentation understands that there is a risk that a lender may call a loan on a property that's been transferred. That lender has that right to do it. But I don't think that makes it an illegal practice. It's just important for everybody to be eyes wide open going into structuring it.
Gotcha.
Yeah.
So if you haven't done one of these before and you're not a licensed agent, you're representing yourself, do you recommend that someone how do they even get forms? Like,
Right.
how do they put this together? Do they consult with an attorney?
That's what we advise. We have a lot of folks that are being coached online to reach out to title and escrow first. And they're
So
asking,
title and escrow is doing a lot of work.
they're asking us for forms, and we can be, it's a little bit different for me because I am an attorney, but for most title and escrow professionals, they're not licensed attorneys,
Right.
that they can't practice law. We can be a scrivener, right? Which basically means that we can fill in forms, but we can't give substantive legal advice. And in a creative financing situation, you need substantive legal advice. And so we absolutely, whenever somebody comes in and says, hey, I've been watching some YouTube videos or listening to some podcasts, I want to do some creative finance. And the first thing they told me is find a title and escrow partner who will do these deals. And we say, yeah, that's a great first step.
Question we
right?
get all the time
Great
too.
first step, but we're not going to be able to be that attorney advisor. The parties really should be represented by counsel. And oftentimes you've got a seller who also doesn't really understand the situation. And so
Right.
the best outcome, even though it's a little bit more expensive, is for a seller and a buyer to both have counsel, right? Because that way, everyone's going into these agreements eyes wide open. If there ever was a legal challenge to the documentation, there wouldn't be a successful unconscionability challenge from a legal perspective because everybody was able to get up to speed on the documents. And just unconscionability claim in the legal context really is where you've got a unequal bargaining power between the parties, a really sophisticated buyer and a really unsophisticated seller, or maybe the seller's under financial duress, and a buyer who's coming in trying to take advantage of that situation and structure an unfair deal could risk running into some legal trouble down the road. So the idea is to just try to get as much understood and out in the open between the parties as possible, and having an attorney involved is really helpful, but separate from the title company, right?
Right. Yeah. You just you happen to be an attorney with this knowledge, but you work for the title company, but you're not. Your escrow officers are not acting in a legal capacity in any way. And we want to make that really clear because I think that's sometimes undue pressure. I see that is put on the title officer to really take the place of a paid professional elsewhere.
right.
And that's not their role.
Right.
So,
And so great forms are available with attorneys, and not every attorney in the Valley is going to want to draft up creative financing documentation for whatever reason. But there are a number who do. They've got good forms, and we have a kind of a Rolodex of referrals of attorneys who are working in this space that we're happy to connect people with who reach out to us. And I know that other good title officers and escrow officers in the Valley at other title companies do as well.
Sure.
There's some good relationships there. And so I do think it's a good first step to come in and talk to your title and escrow partner and say, hey, I've got this deal that I want to do, but it is a wraparound financing situation, or it is a subject to, one, can we close those deals with you? And two, who else do I need to talk to? Those are great first questions to ask.
okay, that sounds great. And another distinction too, I think a lot of times people think that creative financing has to be really complicated and use all these special forms and use the coaches and do all the things, but there is such a thing as just straight seller financing too, right?
Totally. And I should have mentioned that on the sliding scale. That's right, because it's a non-conventional
I've
lender.
taken advantage of that. In fact, I've sold property seller financing, and that can be a great vehicle either if somebody has a paid off property or if they have the ability to pay it off at closing. We had a situation where I'll just jump in as an example. We had a commercial building that we sold. We had a willing buyer, not able to get completely conventional financing or didn't want to jump through the hoops of an SBA loan for 6 months. And we had a mortgage on that property, but we put together some funds, were able to pay off that mortgage and took advantage of seller financing. And I think that truly can be a win-win.
Absolutely.
We're deferring capital gains. We are having interest, and the buyer is getting into a great product. And sometimes for a lot less rigmarole to move forward. That is something that even if you're working with a realtor, for listeners out there, if you have a realtor that you're working with on properties, if you have a seller, especially with a paid off property, that can be incorporated within the Idaho real estate forms very simply and then handled through a long-term escrow through a title company, correct?
That's right. Absolutely correct. And for a really standard seller financing type situation, we do have all the forms as a title company, and we really are able to act just as a scrivener, especially if those real estate commission forms are being used, right? There's the seller financing addendum, the terms of the note, interest rate, term, payment amount, balloon payment if there is one, that can all be included. And then we're able to plug that into our documents, and it's a really straightforward transaction.
Okay.
Yeah.
Awesome. It's just good to know. Let's explore the simpler things first.
Right, before we dive head first in. Yeah, and I do think that's a good piece of advice for a lot of the new investors is you don't have to just tackle the most complex, crazy situation. Maybe there's an opportunity to just do something seller financing first, and then you can work your way in to some of these the deals that have a little bit more hair on them.
And maybe you're a really high W-2 income earner and you've got the ability to do a conventional great 30-year fixed product with a
Right.
down payment, there's nothing wrong with going the conventional route too. Because I
Absolutely.
do see that. Or I'll
Right.
see a very successful physician, for example, that goes to a seminar and all of a sudden they know they have to do fix and flips because that's how they're going to invest in real estate. But
Mm-hmm.
the vanilla way, that's how I did it. It works too. So the beauty is there's so many options, and
Right.
it's great that we are, when necessary, have these other options to be able to employ.
Right.
And
And,
go
and you
ahead.
kind of think about it really as a risk allocation, regardless of which structure you choose, right? There's just
Right.
an allocation of risk there. And so as a seller, right, they're considering, well, do I want to trust this new buyer and their ability to pay me on a regular basis? Or do I just want to be paid out and have the buyer bring in conventional financing? And so that's a risk allocation between the seller and the buyer there. And same thing on down the line, right?
Totally. Let's mention the word wholesaling,
Mm-hmm.
because there's a lot of misunderstanding. There's been a lot of talk about how wholesaling's become illegal in some states. I know in the state of Idaho, there's a lot of talk on whether you can or cannot be holding a real estate license
Mm-hmm.
in wholesaling. How can you speak to that and explain to the listeners, if they don't know what a wholesaler is, what really that consists of?
Yeah, great question. The wholesalers are generally individuals who put a property under contract and then they go sell that contract to an ultimate buyer who's going to step in, pay an additional price. Maybe the wholesaler's also doing a facelift to the property or helping the seller in some other way to get the property ready to transact. And so usually that middle person wholesaler is going to be collecting a fee of some kind, whether it's that arbitrage between the price that they have it under contract with the seller and that they have it under contract with the ultimate buyer, or maybe it's an assignment fee. But that wholesaler is a person who's putting property under contract, but not with the intent to hold it for themselves.
Okay.
It's flipping it without ever owning it. And I think that there's an attack on wholesaling. One is from the real estate licensing standpoint, because in a lot of ways you're doing a function that can be perceived as similar to a real estate agent. But the other is that some wholesalers operate, I think, and I'm not saying all wholesalers, but some operate under some tactics that can be perceived as predatory. Some sellers that are in a bad financial situation, there's pressure to sell, they're elderly, they're way in debt, they have some problems that are forcing them to sell rather than them choosing to engage, right? And so they get the mailer that says, hey, we want to give you your all cash offer. And then they say, well, gosh, I don't know what else to do. Maybe getting a little bit out of this house is better than losing it in bankruptcy. And there's two sides to that coin, right? One side is someone might say, well, that poor person, why would a wholesaler take advantage? But the other side is that a lot of wholesalers are giving these people a great service because they are just overwhelmed by their financial situation or their health situation. They just can't fathom the prospect of having to hire contractors to get their house ready to sell. And so there's just a kind of a differing perspective there and an important approach for a wholesaler to take. And I feel like the wholesalers that are ultimately successful are the ones who recognize the human element of what they do. And if something's too good to be true, it probably is, right? So they're not trying to take advantage of somebody, but they also see the value that they add to people's lives.
Yeah. And it's, I think, important part of that equation with a reputable, good-hearted wholesaler is they're going to give that person options. Early in my career as an agent, I had a great experience working side by side with a wholesaler very frequently. There were many times that we would run numbers and he would make an offer and it just was not going to work, or he could see that property really with just a little bit of spit shining could really do much better on the MLS. And I would list the property and be able to help them get the top dollar. So it's so situational. I think that's where we can run into trouble, is where we don't give those sellers the option and make sure that they know that their rights. And it's especially important if you're a licensed agent and you're trying to talk to any of these potential clients. Right now, they're a customer before you've signed any agency, but it's really against the code of ethics, in my opinion, to not give them their options. I'm glad you touched on the predatory. So let's talk about ethics for a minute. You mentioned something earlier. We were chatting about elder law. Tell us about that.
There's a lot of concerns around elder abuse, and there's some reporting obligations that we as a title company have. And that's why whenever we're seeing some of those red flags and we're getting some pressure, that we're going to pump the brakes a little bit, because we have to make sure that it's not a situation of elder abuse that we're obligated to report. We have trainings that we go through on a regular basis to recognize those red flags. And so I think sometimes that might be interpreted where a title and escrow professional will say, we don't do wholesaling, period, or we can't. And that there's not a word, I think, that frustrates real estate investors more than we can't, right?
Right.
And so I would counsel any title and escrow people who are listening today to not use we can't, but just to make sure that if you're seeing red flags, that you're communicating well with the parties. Usually there's a process through if the parties are willing to go through it. But common red flags that we see, just the fact that an elderly person is involved is not normally going to cause concern. But if there's a price that is well below market, it's not our job to appraise or audit price points. And again, if that's the only factor, it's not going to be something that jams up a transaction. But if it combines with other things, then we're going to pay attention to it. High pressure, if somebody comes in and says, hey, would this has to close in 3 days, right? By itself, we close a lot of transactions in 3 to 7 days. And we've got some great escrow officers and great title officers who can do that work quickly. But if it's combining with other things, we're going to say, hey, hold on, like what's going on here? If there's someone who's unwell or there's a power of attorney and the power of attorney is very recently signed or very, very old, and that combines with some of these other factors, that's going to give us some pause. And really just looking at the totality of the circumstances. And if we, from our experiences as title and escrow professionals, if we start to feel that spidey sense go off, we're going to start asking some questions just to make sure that we understand the nature of the transaction. And oftentimes everything checks out and we're good to go, right? The power of attorney was signed and then a health issue came up and there's a ton of work that needs to be done on the house, and the seller also has family members involved and the family understands the deal, as does the seller. Like, you can get through a lot of these red flags, but there are going to be things that we pay attention to. And as a title company, when we close a transaction, we're putting ourselves on the line as well. And our goal really is to mitigate as much risk as possible for all parties to the transaction. So those are just some general kind of red flags that we watch out for from the elder abuse standpoint. This issue isn't always coming up in the wholesaling context or always coming up in the creative financing context, but it is probably more common in those than the conventional buyer, seller, lender situation.
Gotcha. Thank you for explaining that. I think it's so important, and there is such a difference. And I'm pleased to know we have some great wholesalers in our community that are doing the right thing
Right.
and that are really coming from the heart of service. And that's what it's about. I don't care if you're in creative financing, wholesaling, if you're in any aspect of real estate, you're not going to last long if you don't have the right heart.
Right.
And you're not there to serve people.
Right.
And so,
Yeah, they're ultimately your clients, and that your reputation was about all you have from a long-term standpoint. And if you burn that and take advantage, it just doesn't take long for the word to get out.
totally. Yeah. Oh, it's so important.
Hey friends, if you're busy like me, you're always on the lookout for trusted professionals that can help you with your business, home, and investment needs. Whether it's a trusted lender, real estate professional, or a vendor that might be able to come in and work on your home or your investment property, there's always a need out there, and we want you to have great resources at the ready. So Boise Reen has developed an exclusive vendor directory chock full of businesses that are ready to help our community. Head on over to boisereen.com, grab your free copy today, and don't forget, let them know that Boise Reen sent you.
I want to talk about title and title insurance. I'm an agent, and I think unless you're experienced licensed agent, there's a lot of gray area and people don't even really understand the role of title insurance or why it's important. We just go to a beautiful office to drink coffee and close those deals. But what do you even stand for? What is title insurance, Taylor?
This is the exciting question that I think all of our listeners were here for.
Well, but it's important.
So title insurance came to be because of a real issue in the real property record searching process, actually. So decades ago, it was actually attorneys that were providing opinion letters regarding the title to property. And the challenge is that the attorney would issue their opinion letter, but if they made a mistake, the parties didn't really have a lot of protection, right? Then you got to go sue the attorney and try to file a claim on their professional liability insurance and try to get them from malpractice. And that whole process is just a can of worms, right? Litigation in general is very expensive, no guaranteed outcome. And there was just not a lot of assurity for these buyers that were hiring attorneys to produce these opinion letters. And the title insurance came to be to address that problem, where we're researching the real property records and then we're providing what's effectively an indemnity contract against the research that we provide. The seller's able to move on and go and do their thing, right? And the buyer's able to confidently proceed and purchase this property, knowing that if there is an issue, a cloud on the title that was not discovered through the title searching process that doesn't fit within a pretty small section of exceptions, then they're going to have coverage for that and they're going to be protected. And that is a very important process in the real estate transaction that I don't know that everybody understands. And lenders love title insurance because lenders are even less familiar with the real property, right? A buyer might live down the street or it might be a relative. They might have a pretty good comfort level with the history of the property, But a lender, they don't know anything about the property or the parties involved. And so that's why a lender is going to require title insurance. And it's such an important solution for them. And so that's a big key there, is just to give folks the peace of mind. Common issues that are popping up on title insurance where we see claims being paid out, unreconveyed loans, easement agreements that impact the building on a lot, location of improvements, encroachments from decks or fences, or sometimes actual pieces of the house or the building itself. Those often are issues that come up. We see some, maybe there's a unique local impact district or improvement district type of a lien or assessment. Sometimes things do get missed, and that's where title insurance kicks in to cover. An heir that comes out of the woodworks, right? Or a business partner that wasn't aware of the property being transacted. Those are all things where the title insurance company is involved in making sure those happen, and are making sure that those risks are protected against. And if the risks materialize, then there's an opportunity for a title insurance claim. And so that's a big piece of it. And then the other piece is that title insurance companies, in researching the title and helping the parties remove clouds from title, are perfecting real property records. And I don't mean that from like the legal perfecting a security interest standpoint. I mean making the real property records better. And so over time, it's easier to search title. It's easier to understand where you stand with title to your property because of the work that title insurance companies are doing, which is a secondary benefit that I just don't think gets talked about enough. Like, it's a service to the community. It's a service to property owners. It's strengthening property rights because people better understand the rights that they have, and these issues clouding title are being removed and resolved over time. So those are the two main things that I would champion about title insurance, and there's just not a great solution out there for either of those otherwise.
Right.
I mean, our real property records from a national perspective are dictated by thousands of counties that are all independent body politics, that are all under different systems and track their documents in different ways, and are all governed by these little groups of county commissioners out there, right? Thousands of different counties, and they're all doing their own thing. And it's title insurance companies in each of those counties that is really providing that clarity and consistency. And it's huge.
Wow. Is it possible to close on a property without going through title?
Sure. Yeah.
You just sign a document and
you sign a deed and now it's yours. Yeah. People do that sometimes. And every now and then we'll cross a situation, right, where somebody comes in and says, hey, this is a family cabin. It's been in the family for 60 years. I don't think we need title insurance. We're selling it to the nieces and nephews. And generally, it's still hard, even in that context, to say, forego title insurance. You're probably good to go here, because the property's been held for 15 to 20 years and nobody's looked under the hood, right, to see what's been recorded against the property. Are there any liens or encumbrances that weren't expected? Like that look under the hood is worth the small expense. And a title insurance company, even on if you're not just doing a title report, but getting the title insurance policy, that policy premium is such a small portion of the overarching transactional costs associated with the buy sale. And one option, if you're just someone's really trying to scrimp on the budget, is to have the title report done, have the title company do the research, and just that. And then you take subject to that report. But then you're putting yourself back in that situation, which is the attorney opinion letter situation, right? Where there's no title insurance, it's just a report. And then you've got to rely on that report without the coverage. The types of situations where I have specifically said, hey, I don't think you need title insurance here, is when the property was going to be held for a few weeks or a few months, right? There was a window of time where a buying entity was going to step in, and then ultimately it was going to be taken down by this final buyer. And that final buyer wants the title policy because they're going to carry it on. But that intermediary buyer there that was going to hold it for a few weeks.
Yeah.
But again, like, something can come up in 2 weeks, right? So
that was my question. I was thinking about, as you were saying that, holding for a short period of time. A lot of our listeners are fix and flippers. And so they're purchasing, right? And then their hope is 90 days to 6 months, they no longer hold it. What kind of title insurance do you recommend for those situations?
Yeah, you still got to get a full-blown policy. When you ultimately are transacting again, right, your new buyer, they're not the same as you. They're not the same entity. And so it's a new insured, and they're going to need to ultimately have a title insurance policy that's provided for them. But because of the recent title research that's done, there is a reissue credit that's available. So all title insurance underwriters provide a reissue credit. It's going to be a discount. It's not taking out all the costs, but it's going to save quite a bit of money there. And I think it's worth that fix and flipper who's holding it for just a few months, especially because they're oftentimes going to be working with individuals who have lien rights, subcontractors, suppliers, material men, and having that title insurance research done, that policy available is going to provide some help there for sure.
Okay, cool.
And extended title insurance coverage is really what you're going to need to have in order to get coverage for mechanics lien risk. So it does cost a little bit
I
more.
was going to mention
Yeah.
that. I know as an agent, I'm always like a stickler, like we're going to get this, especially when there's been a lot of work done to the house. And
Right.
for those that don't know, a mechanics lien is when a contractor or a subcontractor does work on a property and they don't get paid. Correct me if I'm wrong, but my understanding is they don't get paid and they can place a lien on the new owners if there's not any coverage. They can try and do that no matter what, right?
Right. Yeah. So it's a super priority interest, which puts them ahead of any lender that is in place, which is why it's such a
wow.
big concern
Okay.
for a lender on a property to make sure that those mechanics lien rights are being addressed. And just as a high level view of mechanics lien law in Idaho, work done on a property that hasn't been paid in 90 days, right? That 90-day window is where a mechanics lien right would go away if a lien's not been filed. So subcontractor finishes their work. They have 90 days to file their lien. If they haven't been paid, it's against the real property. So it gains that priority position. And then in addition to that, lien holder does need to prosecute their lien in court within 6 months. So they have a 6-month window. And if they file the lien, but they don't initiate the legal proceeding in 6 months, then it's no longer encumbering the real property. It's still an obligation to the individual that agreed to pay them contractually, but it will not encumber the real property. And as a title insurance company, we will, without question, provide title insurance, even though there's that lien that's been recorded, if the strictures of the mechanics lien law haven't been satisfied. If somebody files a lien, but they don't initiate the action, we're going to be ready and willing to insure. If somebody files a lien and it's arguably outside the 90-day period, we're going to have a hard time insuring over that situation because there's a factual dispute that a court's ultimately going to need to decide, or the parties are going to need to work it out. So I would say that front end 90-day period, when was the work done? When was the lien filed? Ultimately, if the lien does get filed, we're going to have a harder time. But when the lien gets filed, if in 6 months it hasn't been prosecuted, then we are going to be good to go there from a title insurance standpoint.
Okay, awesome. If anyone ever has an issue after they've closed on a house, do they just call their escrow officer?
Generally, they'll call their escrow officer. The title insurance policy has instruction on how to file a title claim.
It's good we never have to look at it because it rarely happens.
And that's another area where title insurance companies have been getting a lot of heat lately from the federal executive previous to President Trump being elected, called out title insurance specifically and said, hey, we're trying to make housing affordability, and so we're attacking title insurance. And one is it's one of the smallest transaction costs in the home buying process, so that's silly. But two, there's just a misunderstanding about the claims percentage. It's a very small number, but it's because we do really good work and we're a different type of insurance product. We're not a forward-looking auto insurer or home insurer, right, that's having actuaries trying to predict the likelihood of a car crash. We're doing our research and then it's backward-looking, right? We're providing that insurance for the research that we do. And so, of course, our claim rate's going to be lower. And then where people are just going off of that policy to understand how to get the claim process started. So,
Okay.
Sorry, I went on a little rant there.
No,
but-
it's good. I think it's very interesting. And from people that are listening that are buyers or sellers out there, is there a legal law on who actually gets to select that title company?
It's a good question. We get asked that all the time. No, there is RESPA out there, right, where the borrower does have the right to select their title insurance company. So I shouldn't say no, but it's a piece of negotiation, right? So there's not a law that says the seller gets to choose every time. And when you negotiate a real property transaction, the parties are deciding, like, and if a seller says, hey, I want it to be this title insurance company, or I don't want to do the deal, the buyer has the ability to agree to that, right? Or the same way the buyer can say, I'm only doing this if we close at my title insurance company that I know and trust and have a relationship with. Like, the seller gets to say okay or not okay, right? Like, the real concern, I think, is when you've got this real property transaction and then a lender comes in and says, hey, it's got to close here. And that was really the key point of RESPA, and that's been factored into how transactions are talked about now. I think technically the buyers got their right to choose which title insurance company they go with, but it's part of that transaction negotiation process. So I think that's misunderstood a little bit.
Gotcha.
Yeah.
Okay, thanks for clarifying that.
I hope I clarified it. Maybe I muddied the waters more.
No, it's good. It's always a question. Even in real estate, there's a lot of misconception, even among realtors, on who gets to
Yeah,
do
but it's like when you
so-
sign a contract, you are effectively agreeing, right? You're consenting. And so that's the decision. But there's nothing that says, hey, the seller gets to absolutely demand the title insurance company, or because the buyer's the insured on the policy, they absolutely have to dictate and the seller's got to go with it. It's no, the parties can decide that.
Yeah. Okay. Thank you for clarifying. I'm going to jump back to the investing aspect. And one other question that I was thinking of is, as a newer investor and you're getting ready to jump into the game and you're going to either start wholesaling or you're going to acquire these creative finance properties and turn them into a buy and hold and that sort of thing. You have a couple tips for people on how they can best protect themselves getting started. Is an LLC important?
Yeah, great question there too. An LLC is very important because of the personal asset protection, but you have to observe the corporate formalities in order to get that protection. And so generally when someone's forming an entity to hold real estate or to run their business within, they might start out full head of steam and they've got this great operating agreement and it spells everything out and creates all these obligations, and then they don't follow them. And then maybe they commingle some personal funds with the business funds, and all of a sudden, they get sued and their personal assets are not protected, even though they've set up this LLC, because there's a veil piercing claim, right? There's this corporate veil. And from a liability standpoint, someone could still pierce through that if they're not observing all those formalities. And so it's very important. I think an LLC is a great vehicle just because of the flexibility of it. Two partners can come together, form an LLC, and be taxed as a partnership, or they can elect to be taxed as an S corporation and receive some of the savings on employment taxes, or elect to be taxed as a C corporation if that's the direction that they go. LLC is a great vehicle. You just have to make sure that you're observing by those corporate formalities that you set up in order to receive that protection. You need a separate bank account. You need a separate EIN, even though it's a pass-through entity, in order to get that asset protection there for your personal home, other assets that are held outside of this business. On a related point, you see a lot of people in the real estate industry that are structuring holding companies for all their real estate investments, and then those all roll up to an umbrella company, but then they're using that umbrella company to provide property management services to all of these companies that are held underneath, which completely circumvents the asset protection strategy there, because you're creating a liability for the parent company that holds everything underneath when you've set up all these entities below in order to protect those assets and keep them separate. You're really creating some potential liability problems there.
Oh, see, that's new to me. Thank
Yeah,
you
so if you're providing services to all these entities below, then you want that to be also a separately held LLC. And so it's easy for this to get overburdened by paperwork, and real estate investors and owners need to decide how much of the legal paperwork is worth the burden. Is the juice worth the squeeze, so to speak? You can really make you can make a whole complex web that may not be worth it. Or there's some other asset protection strategies, creating a irrevocable trust in the state of Wyoming or offshore. And those are very expensive to set up. You have to have a trustee who's in control and not the grantor of the trust. And those trustees have to get paid on an annual basis, some kind of an asset management fee. And someone who owns one piece of real estate, it's not worth the cost of creating this really complex asset protection standpoint from the trust standpoint. It's just too expensive, right? The risk is worth bearing and following some of these other things. Another important piece is to make sure that you have good insurance too. It's a really great risk protection piece. And then just making sure that you do good work and don't mix business and personal. And I think that's probably what I would recommend initially.
Okay. Oh my gosh, so much rich advice. And yet you're not like no one can call you right now and hire you for hire, correct? You're at the title company.
Yeah, my obligations
so just
are
to be
to
clear
Fidelity
on
National
there.
Title.
I don't want you to get flooded with questions like
And we have an interesting opportunity in the title insurance business to just brainstorm with people about structuring transactions. And as an attorney, you absolutely have to be careful that you're not giving legal advice and creating an attorney-client relationship. And we don't want to create a conflict of interest with Fidelity National Title and myself. And so I really try to steer clear of those situations. But at the same time, if we're talking about how we can address a situation that impacts our ability as a title insurance company to insure, then I'm absolutely protecting our title insurance company and helping us do a good job in the work. Hypothetically, brainstorming transactional structure in situations, as long as it's connected to the work that we do at the title company, is something that I love to do. So I'm okay if people call. That's not a problem at all. They can reach out, email, connect through social media, and I'm happy to talk about these subjects that we're discussing. And if I feel like it's out of bounds with what I can do in my role at Fidelity, then I've got a great group of attorneys that I know and work with.
We've got some great in the group too.
Yep.
So
and that's right. You
definitely.
In your group then that we'd love to see be supported.
Okay. Awesome. Thank you for clarifying that. You are so involved. I just see you. We've not known each other for a long time, but I see you everywhere. I see you on other podcasts and involved in different communities. What do you love being involved with most here in Idaho?
This community is so incredible. I actually was thinking about it this morning, what symbolizes that and how that culture's been built. And a couple of experiences that I've had stand out in my mind. And one is going to the Shakespeare Festival. So Idaho Shakespeare Festival was a great organization that is bringing arts and culture, theater to our valley. And at the beginning of every show, they recognize their longtime sponsor, and everybody knows who the longtime sponsor is, right? They're like, this is brought to you by, and then everybody waits and they all yell, KeyBank. And this isn't necessarily a plug for KeyBank specifically, but it pulls on my heartstrings a little bit to just see a community that embraces nonprofit organizations and social and community support so strongly, and they demonstrate it by the funds that they're providing to these organizations.
Right.
And I think that symbolizes a culture here where we have so many nonprofits, so many great companies that are all trying to support and build and grow. And there's this great vibe here locally where people are really seeking the greater good. I just love that about the community. And the second experience that kind of kicked off my time in Boise, it was 2014. I was pretty fresh out of law school. I had a great grandpa who was a potato farmer in eastern Idaho, and he was a state representative for a few years. And he passed away when I was about 8 years old. And I just had heard stories about his life, didn't really have the opportunity to get to know him that well. But his name was Wayne Tibbetts. And my grandpa, his son is Errol Wayne. And my dad is Todd Wayne, and I'm Tayler Wayne. And so I felt this really close affinity to my Grandpa Wayne, is what he was called. And he had a license plate that was Mr. Tibbs, and he would paint on the period because it was too many characters. And so just this cool Idaho soul. And he was really close friends when he was in the legislature with Butch Otter, who was not Governor Otter at the time. He was also a rep, right?
Right.
And so I came to Boise in 2014, and Governor Otter was serving. And here I am in Boise, and I know my Grandpa Wayne loved Butch Otter. I'm going to call and see if he'll meet with me. I'm a brand new attorney. I don't have anything to offer Governor Otter. He's serving as the governor. He's very busy. And I call his office, and 3 days later, I'm sitting knee to knee with Governor Otter talking about experiences that he had with my grandpa. And it was incredible to me that I walk into the Capitol building, and I'm chatting with the governor, and he gave me a half an hour of his time. And we talked about memories that he had with my grandpa. I shared some really, really cool experiences that they had. And it just gave me this really great impression about how you network and how you treat people in this valley that impacted me incredibly. And so I've tried to follow that in my own approach to networking and try not to turn down meetings and really try to give anybody a shot that wants to sit down and have a cup of coffee and talk about what they think we could do or work together. And there's lots of different people in the valley that are doing a lot of different things, and you don't know when you're going to meet somebody that's going to have a really big impact on you and on your life. And I've taken the shotgun approach to my marketing efforts, and so it's been all over the place. And I'm sure my employers at times have been like, gosh, how do we wrangle this guy in?
Oh, my employees say that.
Yeah.
For me.
Yeah, and mine do too now too. They're like, gosh, Tayler is all over the place. We'd love for a little bit more focus. And I've come to terms with the fact that is a little bit of how I'm wired. I just love meeting people and being able to have that opportunity to find out how we can help. And not always is there an opportunity to help, but just taking the time to get to know somebody is so rewarding. And there's a great culture here in Boise still.
Yes.
And we've grown, and we have more people here, and there's, folks from out of our market that maybe have been in environments that operate differently. But I think for the most part, those folks start to realize, oh gosh, it's a little different in Boise, and I want to be that way too. And I just encourage everybody here to continue to do that, to check the egos at the door. And it doesn't matter the position that you have or how big your company is or how small your company is. Just treat people well. I think it's a beautiful thing about our culture in our valley.
You are speaking my language. I love that. And we'll have to have an offline discussion, but we have several family members that were in the legislature too. Thank you for sharing that.
Absolutely.
I love this conversation. I'm just so grateful that you're in this community. I know you're busy. You've got 5 kids, you've got family going on, and all of your other ventures. I wish we could go into everything today, but this has been amazing. I know you've brought value
Thank
for
you.
the listeners, especially in that important conversation of structuring these creative deals. This is an opportunity to open up the floor for questions. Again, Tayler already said that he's available, and then this is why our community exists, to walk through these things, and nobody is going through their real estate journey alone. And so please feel free to reach out and leverage our community to gain these resources. Thank you so much for being here, Tayler. I wish you the very best and look forward to a great year together, celebrating and growing here in the Valley.
Thank you so much. And I should say, there's probably more detailed questions that we could address specific to structuring the creative financing situation. So I know maybe some listeners were hoping for a little bit more meat from me there as far as, do I use trust? Do we do a lease option of purchase, et cetera? So we can table that for another day, or people can reach out to me. I was just in the back of my mind thinking, gosh, I was going to talk about that. So at some point in time, we can delve into
Absolutely.
the
And
details
Taylor's not
more.
going anywhere. He's part
yeah.
of our Boise Ring community.
Yep.
And so I think that would be a wonderful topic for a future event.
Cool. Let's
Like
do it.
come see him live.
Hey, there we
And we'll
go.
unpack some of this conversation because it is definitely worth a second conversation, or maybe we'll have you back on the show and
Would love
and
it. Yeah,
tackle it a
sorry to
little
just
bit
invite
further.
myself. That's not what I was trying to do, to invite myself back on. But,
No,
yep.
no, it's good and people want to know these things. So I know we did unpack a lot and it does formulate a bunch more questions.
Yeah.
And so that's the beauty of it. There's always more to learn.
Yep,
So
absolutely. And I'm happy to connect with folks on social media. That's
it's
big.
the best platform.
Yeah,
that you-
LinkedIn is the platform that I use the most. I feel like there's a lot of opportunities to stand out on LinkedIn, and so I use that one a lot. But actively engaged on that platform. I'm a little bit on Facebook, not much. A little bit on Instagram from a personal standpoint, and then have been engaging a little bit more in X just because of the really great kind of deal transaction information that's on there.
Really? Okay.
So I would recommend X and LinkedIn for our real estate people to network and build relationships and also learn. But I can be just a DM on LinkedIn, or an invitation to connect is a great way to get the conversation started.
Okay, sweet. Oh, this has been fun. Thanks so much for listening, guys. See you next time and make it a great day.
Well, that's a wrap for today. Thanks for joining me here at the Idaho Real Estate Investors Show. I hope you're leaving with new insights and inspiration to help you truly grow wealth through real estate. If you enjoyed the show, do me a favor. Please subscribe, leave a review, and share it with those that can benefit from it. Go and grow, and I'll catch you on the next episode.